This is Rod Kusin and Spooman for Risk. It is 9:12 a.m. March the 12th. This market is about to short. Alright, we had a nice low here and a divergence. Market ran up, indicators moved up, indicators are now moving down. The slow indicator is just dropping below the zero line. This is about to come down. Let's recalculate from about here. It's about 856. See the lows? Lower lows, lower lows. That's a setup. We've got lower lows and we've got lower highs as well. That bar, boom, let's short right now. Right now, we're ready to get in and short that market. Okay, we've gone ahead and put in an order for a short at a market. And very interesting. We have, by the way, we haven't moved our threshold lines as of yet. This line really looks like our first calculation ought to be right about there. But what's interesting, if you looked at our video from yesterday, another new low on the premium relative to this time of refresh. Yesterday, during the rally, the lows of the premium were primarily above fair value. Fair value didn't change. It is still negative 575 for today. So while yesterday the lows were above fair value, today the highs are pretty much below fair value. So we have just the opposite going on here, and good reason to expect this market to be dropping. So we'll come back and we'll show you where we're at. We got a little bit out of that trade. We took some profits down there at the bottom. Looking at the premium here, you see how it was slanting up, divergent here, came right back up, back to the high. But overall, we're looking at a short here. We're still holding a short position on some of our contracts. We expect this to come right back down to the new low for the day. But there was, as you can see here, here, and here, there's a slight increase in the premium here over the previous high. That tagged this position right there. But down we come again. We'll come back when we see this thing drop below 47.50. And I'm quite certain it will. We've now set our upper threshold to 561, just slightly above fair value. So the meaning of that is having seen the pivot take place right at this level. All right, you look back here. This was, let's line that up. Okay, the premium was at negative 570. Then over here, 567. Here a little bit higher, 561. So that's where we're going to put it at the moment. We may adjust that again, but that's where we've put it. Now, the significance of the threshold lines. Now, unlike program buy and sell levels, our threshold levels are read in just the opposite way. So if you don't know how to read program buy and sell levels, let us know. But when it comes to our threshold levels, the level that is closest to fair value, all right, the level that is closest to fair value is not the direction that we expect the market to go. The level that is furthest from fair value is the direction we expect the market to go. All right, so our upper threshold is very close to fair value, which means we don't expect the market to be rallying. The level that's furthest away is the direction we expect the market to go. We expect the market to be shorting. And that's how you read these threshold levels. That's not, of course, how you calculate the threshold level, but that's how you read it once it has been established. And the lower level at negative 632 here was based off of this bar right here at negative 632, which is where we placed our level. So we're looking for this market to be coming down. It's taking its time, but it will. And we expect a little bit of a rebound right in here. If you look at the look closely at the upper levels of the premium, see that little slant upward associated with that bar? Not a huge cause for concern, but we're taking note of that. So just to plot that more easily, we'll just go in here right before that bar. Okay, we just want to start to recalculate at 931. Yeah, that should do it. Okay, just watch to see if that continues in an upward slope. We're not really getting any newer lows, all right? And we should probably recalculate here so we have an eye on what's happening with our lows from the time of this high. So we'll reset that to 923. And we'll come back. All right, now we see another bar on the premium moved up. Okay. We're not terribly concerned unless we start getting these bars above the threshold line. Okay, and that bar went to negative 564. Not enough for us to be terribly concerned, but we're going to watch that carefully because as we said, right around this area, we kind of expect a little bit of a rebound, which it may not occur, but just looking at where support levels are, that might it might cause us to move up a few ticks. All right, so that little consolidation that we suggested might occur here is happening as we speak, but fortunately, you notice that that bar was a new low on the premium, so this was going up a little bit. We're divergent now. We've got a new low, so it's quite possible this will resume dropping. We'll keep an eye out, though. Okay, that's more of what we expected. Okay, so we'll end our video here just to demonstrate where we expected the market to be going. This was pretty predictable, and nailed the short right in here. We see evidence that this market will continue to go down, but at least for now, you've gotten the idea. So we'll come back and do a recap at the close of the day and touch on some of the other setups that occurred throughout the day. We invite you to come and ask for a demo, learn how to read the premium. It's the best indicator there is out there, no question about it. This is Rod Kusin and Spoon Man for Risk.